then, UAE regulators awarding a license to the Indian fund manager Kotak Mahindra to sell retail funds here in the Emirates.
Global markets and holding pattern for you this morning. Investors digesting the outcome of talks yesterday between Donald Trump and Volodymyr Zelenskyy.
Get reaction to that in just a couple of moments' time. Now, in Saudi Arabia, the board of the Capital Market Authority has approved a regulatory framework governing foreign investment in securities, places a 49% ceiling on total foreign ownership in any listed company.
Intel shares, meanwhile, have jumped a little this morning after Japanese technology investment giant SoftBank said it is buying a $2 billion stake in the US computer chipmaker.
Meanwhile, shares of Danish drug maker Novo Nordisk also rising, up 4%. That is after the United States approved its Wegovy weight loss and diabetes drug to treat liver conditions.
And Air Canada and Air Canada Rouge flights between both Toronto and Dubai, they remain suspended today as a result of ongoing strike action by the airline's cabin crew staff.
This is the Business Breakfast on the UAE's #1 talk radio station.
Dubai Eye 103.8.
Yeah, let's get some reaction to those meetings overnight in Washington. This was President Trump with Volodymyr Zelenskyy.
We had a good meeting, as you know, just a short while ago with the president of Russia. And I think there's a possibility that something could come out of it. And today's meeting is very important.
Thank you so much, Mr. President. If I can, first of all, thank you for invitation and thank you very much for your efforts.
Going to bring in now the Chief Investment Strategist at Saxo Bank, who joins us live on the line. Charu Chanana. Morning, Charu.
Hi, thank you for having me back.
So good to have you with us. Markets, though, and you're the Chief Investment Strategist, haven't really reacted to this. Nothing really on the stock market, nothing really on commodities and so on. What's your take?
But we don't have anything to react to, do we? We don't have a ceasefire. We don't have a deal yet. Of course, I think the positive sign that we do have is that talks are ongoing now, whether they continue for another week, 2 weeks, 3 weeks, month. That is something the market don't know. So, of course, we've seen some bit of a range-bound reaction from gold, from oil, which are particularly more sensitive to these geopolitical developments. But we do see a continued bid in the defense stocks, which does mean that investors are looking at this with an angle of prolonged uncertainty. And, of course, geopolitically, you want to hedge that situation with some exposure to the defense names.
OK, so what do we watch next? Potentially a trilateral meeting with Russia, the United States and, of course, Ukraine. How could that move markets?
Absolutely. I think that is going to be something much more interesting for the markets, particularly. I think much more crucial as to where it goes, because we do know that Ukraine has been pressing on security guarantees and continued U.S. involvement in those security guarantees offered by Europe as well. So I think that certainly will be one of the key discussion areas which U.S. can address. But the other aspect that we haven't heard a lot on is about the territorial exchanges. And that, I think, really comes into action when Zelenskyy and Putin sit face to face and kind of discuss that. And that has been a sticking point for Ukraine. So I think there could be a lot more reaction from the markets if we see more progress on that front, whether or not Ukraine agrees with the territorial concessions that Putin is offering, or does Putin bend further on those things. I think that is particularly important for the markets to watch.
Charu, I'm wondering how this plays out in Asia, where you're based. You're based out of Singapore. Now, Saxo is a Danish bank. It's a European bank. But yesterday was very much a transatlantic, a European and a United States meeting. Is Asia watching this closely?
I think parts of Asia, particularly, I think I really want to emphasize the fact that Asia cannot be any longer looked at with that homogeneous lens that we've been used to. I think there are some very secular trends in Asia, and particularly, I'm sure, China, India, those that have been exposed to sanctions because of imports of Russian oil. They are watching much more closely than some of the other regions. I think for Singapore, why this aspect is important is because Singapore is a little bit of more of a safe haven and a neutral entity in these kinds of geopolitical establishments. And then a lot of capital capital really flows into Singapore when we see these geopolitical tensions rise globally. So certain aspects of Asia are certainly more vulnerable to others. But if we were to see shifts in risk sentiment, then of course, again, Asia becomes more vulnerable to that. And that is a situation when you can really see it as a block rather than the secular trends that I just mentioned.
Well, let's pick on one of the countries you mentioned there, which is India. And it is indirectly, perhaps even directly impacted this because India is a major buyer of Russian oil at the moment. And that is a bone of contention within the Trump administration. Just yesterday in the Financial Times, Peter Navarro, Trump advisor, a very strident opinion piece in the Financial Times with the headline, India's oil lobby is funding Putin's war machine. That has to stop. How does this play out in India?
Certainly, I think, again, on the back of these discussions that have been ongoing between President Trump, between President Putin and Zelenskyy himself, there has been a little bit of a relief in terms of whether or not, the risk around India facing further sanctions. I think President Trump clearly saying that he's not looking at hiking tariffs on China as a result of their imports of Russian oil also kind of lends India a little bit of a relief that there might be some considerations here. But I think the bigger story here is that India is really moving more inwards. They're focusing on domestic growth. We've seen this huge domestic reform around tax layers coming out in India this week. And that really kind of signals Modi's pivot to, self-sufficiency, to reinvigorating domestic growth and reducing India's dependence on these external factors.
Yeah, the India move yesterday by Narendra Modi, the Prime Minister, was interesting. Effectively, tax cuts on sales tax. I'm oversimplifying, but that was kind of what it was. The stock market liked it. The Nifty was up. It's slightly higher again this morning. But despite the headwinds of potentially 50% tariffs exporting to the United States, India seems to be doing all right. We had that S&P upgrade of the economy just last week.
Yep. I mean, I think it goes back to its structural tailwinds, the ones from demographic. There's a huge demographic dividend that is playing out and could continue to play out in India for several more years. There's a huge digitization effort that's been going out in India. And of course, you see massive investments in transport, in infrastructure, from both the public and the private side. So that increase in capex has resulted in a lot of job opportunities. It has resulted in really the re-rating of the Indian market, I would say. So, of course, I agree that there is some amount of risk, particularly to Indian exporters with this high level of tariffs. But one, there is hope these could be negotiated down in due course of time. And secondly, I think that segment, the exporter segment, constitutes much less to India's GDP compared to its domestic tailwinds. And, I think that is what continues to drive the overall market with a very positive sentiment.
Finally, Charu, attention is now going to focus still in the United States, but away from the bright lights big city of Washington, D.C., to rural Wyoming and Jackson Hole, where the central bankers meeting begins Thursday night, but really begins in earnest on Friday. Always closely watched. It's an annual gathering. What are you looking out for?
So certainly, I think the markets are questioning whether or not we could finally get that dovish pivot from Fed Chairman Powell on Friday when he speaks at that conference. We did see one last year at the same time, at Jackson Hole as well. He confirmed a dovish pivot on the back of soft labor data that came out in August 2024. So a very similar setup again, but again, not so similar because this time around we have the risks of tariffs, which will play out into inflation. So the inflation trajectory is not as smooth as what it was last year with those tariff risks. We know companies have not been fully passing on those tariff costs to consumers right now, but in due course of time, they will have to. So I think that is the inflation risk, which Powell needs to keep in mind. So I think he will be non-committal. I think the case for a September rate cut still remains, but it is very hard to be committal to that from Powell right now, because we do have one more CPI report, we do have one more labour market report ahead of that September meeting.
Charu, always good talking to you. Appreciate your time today. Thanks very much indeed for being with us today. The thoughts there of the Chief Investment Strategist at Saxo Bank joining us live on the line. From Singapore, Charu Chanana.